Okay, so welcome back. Today I want to talk to you guys about using a really cool tool that's provided by the Office of the Public Insurance Council. What this tool lets us do is, well, it lets us compare policies, and not just compare policies, but we actually can dive into policies. Either we can look at different policies, we can look at uh, automobile, homeowners, condominium, renters, insurance. Now, see what happens is a lot of times you'll get a phone call or you'll get something in the mail saying, hey, I'm Mike, I'm an agent, or I'm Michelle, I'm an agent with XYZ company, and I can save you a lot of money on your insurance. Well, you know, if you've ever looked at the declaration page on an insurance, they're sometimes really hard to read. A lot of times they'll have let me see if I have one I can pull up here for you and we can take a look at. I think I do. Let me see here. Let me go into courses. So I really wanted you guys to take a look at that if you do. I sure do. Here it is. So this is an example of a homeowner's insurance policy, or this is actually an auto insurance policy right here. I bet you I can scroll down. I bet you there's a copy of your homeowner's policy. But you can see this is a declarations form. It tells you the insurance company. However, this is the advertised insurance company. So Safeco Insurance. You guys might be if you're baseball fans, you might be familiar with Safeco Field, which is where the Seattle Mariners play. And it's a member of the Liberty Mutual Insurance Group. But the actual insurance is through General Insurance Company of America. Okay, but basically it goes through, it tells you the car that's on here. Let's see, there's a 2009 Infiniti, 2008 Jeep. Okay, and tells you the coverage that's on each policy, and it also tells you what's covered. Okay, or what it costs. So you can see that in this scenario, the liability for both vehicles is exactly the same. You can see if they have personal injury protection. In this situation, the person does not have personal injury protection. You can see that they do have uninsured, underinsured motorist coverage. You can see here that the biggest difference on the policy is that the 2009 Infiniti coverage on the collision and other than collision, which you might call full coverage, is quite a bit more expensive than the Jeep Patriot. Obviously because of the difference in costs. But this coverage D is where most people will rack up the majority of their bill. If you can go through and you can see there's additional coverage, roadside assistance, there is Mexico coverage included, but it's a limited endorsement. So basically what that means is you can go in so many miles into Mexico, but once you reach a certain mileage, then you will you will actually need a Mexico coverage or Mexico policy. Now I do think that I have, yes, in this policy here there is this is Safeco Insurance Company of Indiana, Safeco Insurance. So this is a policy, homeowner's policy. You can see that it shows the dwelling here at 229, and remember that this number here on dwelling should always be more than what the actual appraisal district is. Remember, the appraisal district is what a house recently sold for, or is comparable to other homes. When we insure houses in insurance, we use what's called 100% replacement cost. So if something was to happen to that house and it completely burned down, how much would it cost today in terms of construction costs, labor, materials, etc. And basically the insurance companies use a program and they go through, and so here they've listed it at $229,000. All right, other structures typically is 10% of that. So these are, you know, maybe you have a shed off on another site, or maybe you have a pool house. Okay, and so $22,000. You can have this amount increased. Personal property is usually 50% of the dwelling, although you can get that increased. And then Section D is additional living expenses and loss of rent. So let's say that your house did burn down, unfortunately, and then basically you have $45,000 to pay for hotel fees, etc., while you're trying to get rid of or get your house back up. You can see that Section 2 covers liability. So if someone other than yourself, okay, comes to your house and has an accident, there's a medical payment, but there's also liability. So if they slipped on something walking up to your curb, broke their leg, etc., then they could, if you're going to be sued, it could protect you. Maybe your house caught on fire and then it extended over to someone else's house. That could cover that as well. And you can see that you can schedule personal property on here, because most of the time what you miss is that jewelry is covered at a very, very low limit. All right. So what this person has done, they scheduled personal property here for $7,200. So it's probably a wedding ring or some other types of jewelry. Option ID, identity theft recovery, $25,000 on that. One thing I do want to point out is there's foundation water damage coverage added to this policy, because especially, let's see, I think this is, it doesn't say where this is at. It's probably in Texas though, because it's a Texas policy. But anyway, what you'll notice is that the foundation water damage is included for $25,000, because that can be really, really expensive, and the standard policies typically don't cover it. So you move down here, you can see account credits. The reason this person's getting a 15% credit and saving $200 is because they have their homeowner's policy and their auto insurance policy with Safeco, and they renewed, so that saved a little bit of money as well. Now the deductibles are important to understand. The Section 1 deductible is basically, on this policy, this is a named perils policy. I just know that because of the company. And the amount of deductible is $2,000. The windstorm or hail deductible, see, there's a specific deductible for windstorm or hail. It's actually based on a percentage of the house. You could change that to 2% or 3%, but you always want to make sure that the person who's financing your home, or the company financing your home, the bank, is okay with you increasing this number. Okay, because if you increase this number, let's say to 2%, then now you have, $4,500 you have to pay out of pocket. And if you can't pay it out of pocket, then the bank will have to pay it out of pocket if you foreclose on the home or something like that. So that gets you down to your total annual premium. So there's a lot of stuff on here. You can go down here and you can see that there is a servicing mortgagee, okay, and that's GMAC. But see, this is where it gets really, really complicated, because you see all of this stuff on here. So scheduled personal property, Safeco select homeowner policy, full value of the personal property, a mandatory endorsement. You see all this stuff here, and it starts to kind of be hard to, when you're comparing to another policy, it could be hard for you to compare to another policy. So what I'm going to do here is I'm going to take this policy, I'm going to move this out of the way, and let's say an agent came to me and said, hey, I have a policy for you that can save you $300 a year on coverage. Well, that sounds good. Sounds really good, actually. But what you want to do is you want to compare the policies given, because what he or she might be selling you may not provide you the same amount of coverage. So what I'm going to do is go and choose the company. So let's just, for me to keep this easy, I'm just going to choose, well, I can do Safeco, that's fine. Okay, Safeco Insurance Company of Indiana. I believed it was this policy right here. Right there, so I could look at that look at the current coverage that I have right now, and I'd have to double check. I closed that, but let's just assume that it did have these endorsements on there. And then let's say that it's from another company. Let's say that you're a military person and you see United Services Automobile Association, USAA. All right, they only write one policy, and it's an HO3RTX. So let's say USAA comes to you and says, we can save you money. All right. Okay, well, that's great. I love to save money, but are you going to offer me the same types of coverage? So once I choose my policies, then I can select all the coverages, and then I can go to show a comparison. Now this is really cool, because what this shows me is every single type of coverage. For example, the type of coverage, that's the dwelling and personal property. So what kind of perils? Remember, a peril is like lightning, or a peril maybe flood, which is never included on a policy, right? It says it's an all-risk policy, so it's an open peril. So everything's covered except what's specifically excluded, like a flood. The personal property here, it says it's an all risk. So one thing I can tell immediately is that the personal property is a named peril. So meaning that if you do have loss to personal property, it's only covered under certain items, maybe 10, 12, 15 different types of perils: freezing, robbery, theft, vandalism, etc. But underneath this policy with Safeco, it's an all-risk policy, meaning that everything's covered unless it's specifically excluded. Gives you a little bit better coverage here. That's not a huge thing on the personal property. It is a little bit bigger of a thing on the dwelling. But just remember, if you do get an all-risk policy, you're going to pay a little bit more in the premium for that, because it's the insurance company's taking more of a risk. Let's see if there's anything. So you can see one thing: continuous or repeated leakage from plumbing, heating, or air conditioning system. Okay, not covered by either one of those. So if we look at the water damage area, you can see that yes, however, the coverage to tear out and replace the foundation or slab to access a leak or within the below the slab is not covered, so you'd have to pay for some expenses there. Yes, this includes a loss that is hidden and concealed damage that is reported within 30 days. Okay, so you get an idea of what's covered here and what's not covered. Mold. Yes, however, the limits available of this coverage vary. And it says not covered. However, you could add an endorsement. This is really good because this is other perils covered. So basically what I've done here, and this isn't the best example, because some policies, let me try to give you a better example here. Let's say I chose I'm trying to think of a company that I know off the top of my head. Let's say Allstate, Texas Lloyd's, and let's take a look at, let's say you're with Allstate, and then USAA comes and says we want to provide you with it's not letting me go there. Just do Travelers here. So let's take a look at these. And we'll look at all coverages. Okay, so here you can see that they're all named perils. Alright, so you're kind of getting the same policy here. You can see that most everything here is exactly the same. So what you're doing here is you're trying to identify if there's any big difference between the policy. And from what I can see here is that there's not a huge difference between the policies. They both pay actual cash value, however replacement costs can be endorsed. You'll learn about that in this class. So there's not a huge deal. So if I was able to save a little bit of money in this situation, yeah, I'd probably be okay with that. But let's say, you know, let's compare that one with, let's see if we can try to get the USAA back up, because I want to pull that up again. Okay, now let's take a look at this one. And let's say that you're with USAA right now, and then an agent comes to you and says, hey, with Allstate, we can save you $300 or $400 a year. Okay, well, you can see immediately that that comes with a cost, because your dwelling is now named perils only, and your personal property is named perils only. All right. For example, continuous or repeated leakage from a plumbing isn't covered here with this policy. It's not covered standard by the USAA policy. However, some coverage may be available by endorsement. There's some limited coverage. Here's a pro for Allstate. There is some limited coverage for mold or fungi, but it's only from sudden or accidental water damage, and it's not covered. However, coverage is provided for the repair or replacement of property physically damaged. So there's some more issues here. So I would say, and then I'd scroll down, you could look at all the different ones if you want to when you look at it. See, this policy, with maybe the agent only quoted you with actual cash value on the dwelling for the claim settlement, and it's actually replacement cost for USAA, actual cash value for both here. So this just lets you take a look and compare apples to apples. So if I was in this situation, $300 saving, I would only be comfortable with changing if I knew that Allstate had good customer service, they have never had a problem with paying their claims, they're in good financial condition. But most of all, I'm okay with the named perils difference and the difference between actual cash value and replacement cost. You want replacement cost always on your dwelling. I can't say how important that is. So I hope you find this tool pretty handy. You can also do it with your auto insurance as well. Compare policies, and it's a really good tool to use. So I hope you find it useful.